Hello there, and welcome to EcoSoc's recap of the economic affairs that occurred last week. Our market gainer of the week was ARB Corporation Limited. ARB sell four-wheel drive parts to equip cars with what they need to go on bushland camping adventures. Last week, Morgan Stanley put out a statement declaring the company as a strong buy, with their current price of $42 well below the target of $56 that the analysts have set. The share rose 13% over last week. The market loser of the week was Westgold Resources, a Western Australian company that focuses on exploring, developing, and mining gold. Shareholders were in a scramble to sell upon the news the firm had successfully completed a $100 million institutional share placement, which equates to roughly 48 million new ordinary shares added. The company raised the funds in order to expand its operations to be able to produce 400,000 ounces of gold per annum from FY 2024. Unfortunately, investors were too concerned about the immediate share dilution to persevere and maintain their holdings in the stock. The ASX 200 rose 3.3% last week, mainly due to increased optimism about a Russia-Ukraine peace deal, a decline in oil prices, a relief from inflation fears as the US Fed raised their cash rate, and indications that stimulus measures will be introduced in China. Meanwhile, the unemployment rate in Australia fell to 4%, the lowest it has been since 2008. The amount of unemployed fell by 18,500 between January and February, which is promising given things are still yet to be completely back to normal. Oil prices have come back down from their record highs of being $130 a barrel to level out at $105 a barrel. Whilst this is yet to be priced into petrol prices at the local servo, it is a welcome relief to consumers. The fall in the oil price has mainly been due to a COVID resurgence in China as the Omicron strain takes hold. China still stands by a zero-case policy, and so lockdowns will see a reduced demand for oil. Additionally, the US ban of importing Russian oil has now led to the potential of a deal to be struck with Western nations and Iran for their crude oil, which has created a new element of supply to the market. The Victorian government has launched a trial of a new plan that will grant casual workers with 5 days of sick leave per year, which at the minimum wage equates to $772 eligible for claim per year. The program is called the Victorian Sick Pay Guarantee and will cost $245.6 million over the next 2 years as taxpayers initially fund the program, but it will eventually be passed on to businesses. This comes as casuals have to choose between not feeding themselves or coming to work sick. It is currently only being trialled in certain industries, including hospitality, retail, aged care, and cleaners. That concludes the market recap for last week. Be sure to check out our Facebook page for all the latest events coming up, and enjoy your Flexi Week.